Okay, let's bring in Peter Bethlenfalvy, Ontario's Finance Minister, for more on this latest budget. Minister, it's good to have you join us this morning. Thanks so much.
Good morning.
So the deficit up $13.8 billion for the next fiscal year. We heard a little bit about that from Siobhan in that report we just aired before you. But what are the main factors driving up the deficit so much?
Well, I think there's three things. We're definitely in a softer economy. I mean, that's a global trade turmoil and now global conflict. So clearly, right around the world, softer economy. The second component would be our population in Ontario has grown by 2 million people in the last 8 years. That's a good thing. But of course, the majority of expenditures fall on the province to fund the supports for those people, healthcare, education, social services. So that's impacting our investments and our costs. And thirdly, we've chosen to cut taxes for people and for businesses, putting more money back in their pockets, just like we did yesterday, announcing the small business tax cut, 375,000 businesses that will benefit from a 30% tax cut. They'll create more jobs. They'll grow the economy. So those are some of the factors. It's the world we're living in and some of the choices we're making here in Ontario to protect people and protect businesses.
Difficult choices, I'm sure, to make. I want to talk about that tax cut for small businesses in just a moment, but are you comfortable with the size of this deficit? I take your point that decisions needed to be made because of the state the economy's in.
No, I would like to balance sooner. I think deficits are temporary and should be temporary, but relative to other provinces and other jurisdictions around the world, frankly, we have some of the lowest deficits relative to our economy. And don't listen to me, listen to the credit rating agencies who have upgraded our credit rating over the last couple of years. And also the relative size. I mean, BC had a $13 billion deficit as well. We're 3 times bigger than them, and we have the same size deficit. So I think we're being prudent fiscal managers, but at the same time, leaning into building infrastructure, leaning in to make sure investments are made for the people of Ontario, and at the same time, supporting businesses and the economy with tax cuts.
Okay, so let's talk about the small business tax cut first of all. It's estimated to be about a $5,000 tax break for small businesses. Is this going to be enough, though, given the state that many small businesses find themselves in? Especially last year, there was that $9 billion in temporary tax deferral relief that was kind of had low uptake. So what did you learn from that last year, and is this actually going to be enough for small businesses this time?
If we could just look back to the supports that we gave last year, so 2 billion companies took us up on the tax deferral, so that helped with liquidity. That's a meaningful amount of money. Another 2 billion through WSIB rebates. That's a meaningful amount of money that went into the pockets of the businesses and small businesses right across Ontario. And I would say, yes, this is a significant tax cut for small businesses. Supported by the Canadian Federation of Independent Businesses and many other stakeholders across the province. This will really spur economic activity. And I would add, we had another tax cut yesterday that we announced, the HST rebate, some 13% on new homes. This will spur housing activity. It's a huge affordability measure for families, but it's also going to spur construction jobs, 21,000, and a growth in our economy, according to economists, of $2.7 billion. So we've got a plan that really is fiscally responsible, invests in infrastructure, invests in our social infrastructure, but also boosts the economy.
There's also more than $100 billion going into healthcare. So what improvements can people actually expect to see on the ground in hospitals and in other healthcare settings?
A couple areas. For instance, we're really leaning into home care. I haven't met anyone that doesn't want to age at home. So transforming our system to be able to deliver some of that care, be it a nurse, a PSW, a doctor, to the home. So we're continuing to make record investments to allow that transition to happen. Investing in primary care, we announced yesterday $3.4 billion to put more money getting family doctors to every person who wants a family doctor in Ontario. We lead the country in that regard, but there's more to do. So these are the types of investments that we're making to ensure that people are taken care of, not only in the right place, but it's also good economic policy, because if people are healthier, that's good for their social quality of their lives, but also their economic opportunities.
For sure. But are there any investments going to like hospitals and particularly ER rooms?
Again, record investments in hospitals. I mean, our hospital investment is up some 55% since 2018. You haven't seen an increase like that ever, I think, in Ontario. An additional $1.1 billion announced yesterday. But my message to hospitals, well, and they've been doing a great job to innovate, think outside the box, use technology to cut the paperwork, cut administration and red tape, deliver more for our frontline doctors, our nurses, our personal support workers, for the benefit of patients. There's a lot of opportunity there. They've been great partners in that, but there's more to do.
Okay, so we'll move on. Removing the HST on new homes will cost the province $1.4 billion. That was announced yesterday, expected to generate about 8,000 new housing starts. Is that level of spending, $1.4 billion, justified, given such a relatively small number of new builds will come out of that?
Well, I'm sure you've talked to many of the stakeholders. They said they're calling this a game changer. Experts right across the spectrum, whether people in the industry, construction workers, policy think tanks, they're saying this is a game changer. As I mentioned, a big boost to the economy, a big boost to construction jobs. You know, I was with the Premier on Wednesday and met a lot of the construction workers. I've never seen them smile so much. You know, our construction industry has been hit with the slowdown in housing construction. So this is a big shot of stimulus into the housing sector, all at the same time providing an affordability measure for many families who are dreaming of buying a new home, be it a townhouse, a condo, or a detached home. So this is really, I think, what the market wanted, and we heard, we listened, and we're delivering.
The budget also sets up a $4 billion Protect Ontario account investment fund. It's managed privately, though. So how will the government ensure those investments align with taxpayers' priorities?
Well, first off, the principle that we wanted to signal yesterday with the Protect Ontario Investment Fund is that we want to bring in not just the government's money, but other private sector money to invest in companies that are creating jobs here in Ontario so they don't leave Ontario. We've got great companies in AI, defense manufacturing, energy in the nuclear space, critical minerals, life sciences, advanced manufacturing. So we want those companies to grow, find new markets to export, to diversify trade. And so that's the purpose of that. We'll continue to work on details over the months to come. We're setting it up much like we did the Building Ontario Fund, which is our infrastructure bank, which is the same model, arm's length with a board and a governance model to bring in other investors to get long-term infrastructure done. That's done deals in the long-term care sector. It's done deals in student housing, affordable housing, and also nuclear energy through the small modular reactors. So this is the type of out-of-the-box thinking that we need at this moment in time, given the evolution of our economy and the global trade system. I think these are the smart type of investments which will propel Ontario's economy and continue to create really good paying jobs for the workers in Ontario.
Just before we wrap up, you've mentioned a number of different areas where you could be investing some of those funds. Is there any priorities in terms of where those investments will go?
Well, those are the priorities. I would just maybe go another level for nuclear energy, for example. That's going to create a lot of opportunity in our small modular reactors, new nuclear build, the Pickering refurbishment in my riding for nuclear stations. I mean, that's going to create just in Pickering 30,000 new jobs, a tremendous amount of economic activity. And the technology and the supply chain around nuclear, I mean, the world is envious of what Ontario has. And so that's an advantage. I would just add the critical minerals, another area where those minerals are all here in the ground in Ontario. You have to go to far-flung places to get those minerals like China or parts of Africa. We have them right here in Ontario. We have a real advantage. We've got incredible talent, mining expertise. These are good paying jobs. So we're going to lean into areas such as critical minerals as well.
Okay, we'll leave it there. Peter Bethlenfalvy, Ontario's Finance Minister, joining us live. Appreciate your time, Minister. Thank you.